Good morning, everyone, and welcome to the European crossover webinar. And we did see a pretty good sell-off or pullback in equities across the board as far as NASDAQ, S&Ps, and Dow futures. We'll go and take a look at what we have here on the calendar. We did get French CPI, and we still haven't received Italian industrial orders. They're supposed to come out, but nothing as of yet. Not seeing anything. I mean, hearing the squawk guy say something, but I don't see anything about the Italian data. Hang on. And then we get import-export prices at 8:30 Eastern, as well as usual weekly jobless claims and Philly Fed data. That's all at 8:30 Eastern, and that'll be it. You can see here you have Apple even gapping lower on the pre-market hours. Look at that. Look at Microsoft. Wow, this is pretty interesting. They're all gapping lower pretty much. Google quiet. Take a look at NVIDIA. Gap lower here in NVIDIA. Golly, this is really pressing lower here. You can see here on Amazon, a gap lower here. Tesla drop. Wow, these are really dropping pretty good, these gaps. And that has translated into equities. You can see here on the NASDAQ, that's on the 5-minute chart. You said about comments on S&P and NASDAQ. Well, there's no real comments. I mean, other than to say that we've fallen down, that's it. I mean, we were looking for lower prices, but this even took me a bit aback. But I was saying that if we broke below this level of 927, it opens the door for a move all the way down to 11,500. And we'll take a look here. Doesn't mean it's going to be a straight line, but you can see here we're still pressing lower here because of the gap we're seeing here in the gap lower in the equities pre-market. But this 11,927 was pretty key here. You see here, and so a break lower here opens the door for us to move eventually down here to at least to initially 11,605. Take a look at the S&Ps. Potentially, first dip will be right here, 34.32, but a move down here at 34.16 is realistic before it's all said and done. So we're seeing our, I mean, it's clear, but we're seeing our first real correction. We talked about that. Is it NASDAQ? You see here, this is all just consolidation. We talked about that. So it's on this break here. And then this 927 was key. And we bounced off of that. We overshot a little bit, but we bounced off of it. You can see up here, and then we rotated lower, and then we came down to test, and I said, look, if we get below 927 on a sustained move, and here it is on a 2-hour chart, that's going to open the door for us to come all the way, potentially all the way back down here, but for sure right here to 11,605. And you can see it's been a constant drip lower. So a little bit of support here. It should be 11,834. But this gap lower by cash equities has really got them under pressure. I mean, extended pressure. We were already low here, and you can see how they're just pushing low here. And why I like to follow those cash equities, because if all you do is follow the indices, you're like, well, why is it being pressed and low or whatever? And it's because cash equities have just opened the pre-market, and they're really, I mean, you don't see anything until once we get into this hour. I mean, there is, but you see that follow through, like I said, right now you can see this gap. We just saw that, and you've seen that press lower here. With that, we're going to move into the into FX. We're down at 17.26 on the euro. See what the dollar index is doing. That's up to 93.56. It still has resistance at 93.87, so it hasn't even moved that much higher, the cash dollar index. I mean, you see a pretty good slide here, and there hasn't been any real follow through here on that. We'll just go and pull up the news, and we'll just hurry move into the analysis. I mean, like I said, you can already see the move. I mean, there isn't a whole lot more to indicate other than we're moving lower and potential where we can go to. We've already discussed that. So we'll just go and get into the news. Australian dollar slips and bonds rally as the RBA sounds dovish. The Australian dollar slipped and bonds rallied on Thursday after the country's central bank stoked speculation of a near-term cut in interest rates, while hinting it may buy more longer-dated government debt. The Aussie eased to 71.38, taking it away from last week's 72.43. The big move was Aussie's government bond 10-year futures jumped 8 ticks to 99.24. The rally came after the RBA felt low, noted that the 10-year yields were among the highest in the developed world, and it was worth considering whether buying the debt in the market would bring those down. It's also like the RBA will announce their intention to purchase more bonds in the 5 to 10-year part of the curve. The lower bonds will have the first round effect of reducing interest costs by the government as they continue to provide a massive amount of fiscal support to the economy. Low also said further policy scene would have more impact now that the coronavirus restrictions were being eased much across the country. We see the RBA lowering the cash rate target, term funding facility rate, and 30-year bond yield target to 10 basis points in November. The market has already largely priced in such a shift with 3-year yields, and the need to further stimulus was undermined by the data showing 29,500 jobs were lost in October, while the unemployment ticked up to 6.9%. Low earlier emphasized that creating jobs was the number one priority of both monetary and fiscal policy, and stood ready to do all it could to help. And on to the dollar. Dollars bought as stimulus hopes ebb. Aussie sinks on easing hints. The dollar inched higher on Thursday as rising coronavirus concerns and scant progress towards a U.S. stimulus deal unsettled investors, while the Aussie dropped to a one-week low. And like I said, you can see we've had a decent little pullback here, and the dollar index is only up a few ticks. I mean, this thing could fall like a turd in a well. I mean, really, I'm talking about the cash dollar index. I mean, if you can't rally when this thing, we've had of course we had this huge rally, but I mean, look, it's coming down. There's a lot of pressure, and the dollar index is only slightly higher. And we already covered the information on the Aussie, so I'm not going to say that all over again. Money market surprise for a November rate cut. That's still about the Aussie. Not going to keep repeating the same thing over again. Sterling clung to a 0.5% overnight gain as the European Union and Britain were set to prolong Brexit talks past mid-October deadline to bridge stubborn gaps holding a new trade agreement. European Union leaders in Brussels on Thursday will pressure Britain for concessions, saying €1 trillion worth of trade would be sunk if London does not budge on fisheries for fair competition and solving disputes. The right notes seem to be heard from the key officials, said Chris Pepperstone, and that's going to be it there. So let's go on and move into the analysis. We spent a lot of time yesterday talking about this. So there's just the only thing you're looking at right now is just levels, and obviously the pressure remains on this, and that's why we're breaking lower. I mean, so how many you can give a forecast, a weather forecast, how many different ways you have to change it every single day. I'm just saying is we talked about that there was no correction here. You had to this was consolidating. So you had to respect it until it did, and finally we broke yesterday. But we talked about that from the day before. We've already got past the Apple event. And we've already had Amazon Prime Day, and then we came into yesterday. We talked about, well, we've already dipped. What's the likelihood that they can push any further? And they didn't, and then they started to break lower. Then we kind of pushed a little bit higher, and then we started sliding. And then, of course, about the stimulus talks, Mnuchin came out and said they're going to be very difficult. So that closes out. Even though they're looking further out, the perspective on the market changes, because one of the things that it held up so well is because not only was it the talk for stimulus, and it could be big stimulus, although it didn't look like we're going to get it, but we'd already milked this move. Look how far this move had gone. So once you've milked it, we kind of hung up. But when you looked at the individual equities, that's what I'm saying is, okay, we've already had the Apple event, and we already had a pretty big move on that. And we had a huge move in Amazon. I mean, that thing just went from, I think it was like 3,200 all the way up to 3,500 in just 2.5 days. I mean, how much more could you go? So we consolidated, and then we just started to break a little bit lower. And it was a matter of like, how much are they going to push it? And of course, once Mnuchin said, hey, it's going to be difficult to get anything, then it starts to lean. It's not that everything turns so bearish, it's that people start to liquidate. And essentially that's it. Anyway, let's go move into the analysis. Bear with me. You can see the pressure that came in. And as soon as we came in, we were already lower. But look, once we had these gaps, then the market started to come apart. But you can see here, like I said before, look at Apple. As we came into Friday, we were already moving higher. We came into Monday, they keep pushing even higher. And look where they've been. See, the prior week we were trading down here at 112. You see that? We had put in like this right here, 112, 112 again, 112. We launch up to 116. We kind of hold our own up to 118. And look how far we rallied, all the way up here to 127. So then we have the event, and we talked about how after the day of the event, they usually fade, and they already started doing that. So here we are on Tuesday, the day of the event, and like, okay, so we roll into Wizik, what do you think they're going to go in and do? You know what I'm saying? As we came up here, there wasn't really a whole lot left. And we're just sitting there, it's like, well, I mean, do you think they're going to rally even more after the event's already over? And we just started breaking down. And there was the resistance we talked about yesterday at 123. I put that in the chat room. And once we got there in the cash open, this was the high in the NASDAQ. As soon as we hit 123, they started selling the NASDAQ. And then the rest is history. Now we gap lower. Anyway, so let's go move into FX. Look how well the euro's holding up. I mean, that's what I'm saying, which trades almost inverse to the cash dollar index. And we're still being pressured here in the NASDAQ. We are starting to come into a little bit of support coming up in Amazon, past Facebook also. So maybe we'll start to find a little bit of support here. There's 18 single digits in the NASDAQ. Moving on to the analysis. So the euro held a dip under the daily level of 1732. Support remains the same at 1692 with resistance at 1787. And look how well the euro's holding up. I'm just saying this dollar can't rally to save its life. Seriously, I'm not kidding. If we lose 100 more handles in the NASDAQ, we might rally 10 or 15 ticks in the cash dollar index. Maybe. So this is going to remain the same. No changes here. Let's go moving to the cable. Cable tested the downside support we had yesterday at 28.78. We just went with the levels, remember? And rebounded above 30.50, taking out stops before closing at 130 even. So resistance on Thursday will be 30.83, trying to give it a chance of moving when move higher, with support at 29.31. So we're just kind of stuck in the middle right now. On to the Aussie dollar. The Aussie closed Wednesday in a tight range, finishing the day at daily support level of 71.59. You can see here. Support on Thursday will be 71.16, but we've already taken that out with resistance at 71.72. Now, the reason we've taken this out with some gumption here is because Philip Lowe is suggesting that, well, they're already going to go on and potentially buy more government bonds. That's putting the pressure. So that's a significant thing. We can even push even lower, but for today, we'll have to respect this level of 70.95 because I wouldn't have given a hill of beans for the employment report. I really don't care about that. Although what it's having is it's having an effect because it wasn't good enough. Now he says, oh, well, we're going to have to, we can go and buy bonds, essentially cutting the interest rate down to potentially with looking for 10 basis points. So that that is something with him stating like essentially, hey, we're gonna drop this Aussie lower to a certain extent. We have to respect that. So with that, we will go with the 70.95 as a level support here, and that is a significant development by him stating that. And the upside is going to be 71.59 now. Because now you got something that could press lower. Like, it's going to be pretty hard for them to turn around and come right back up here again. Any moves back up here, they'll use it to fade it. So we'll go with the 71.59. And let's go to the Kiwi. So the Kiwi closed Wednesday with the Gravestone Doji. You can see right here. After testing resistance at 66.83, support on Thursday will be 66.16, which we're almost there, with resistance at 66.91. We were trying to give it a little bit of room in case we want to test the upside. Obviously, it's working a little bit lower in kind with its cousin, the Aussie. They're not the same thing, but it is working towards that and pressing lower. Any moves back up here are going to be faded. So the resistance at this point would be the daily close here. And that daily close would be 66.68. So we did say 66, we said 66.12. No, 66.16. So 66.16. And 68. Dollar CAD. All these dollar pairs are pretty much dogs. I mean, think about it. Look, we're under so much pressure, not under intense pressure, but we're breaking down and they're only just gently higher. It's like, it's really not buying. You think about it, it's just like, okay, some shorts are covering. That's all. I mean, like I said, look how much we've fallen here. And here indices have fallen and what? We've jumped up, what, like 30 ticks, 30 pips maybe? So the CAD continued to defend the 31, but despite the slide in equities, was unable to forge higher. Resistance on Thursday will be 31.98 with support at 31.12. And on to the peso. No changes. Resistance on Thursday will be 21.52. Support 21.19. No changes. Dollar yen. Dollar yen scaled back further on Wednesday. Support for Thursday will be 486, which really would hold up very good in a real quiet market, with resistance at 546. This is more about an extended move lower. The 486. Cash dollar index. So look at this. Let me see. We closed at 93.39 and we're up 21 huge ticks. It's pathetic. So the dollar index pared back despite the pullback in equities. Market is unable to rally. Support will be 92.86. And I meant to say 93.86. Well, it should be 93.87 right there, that level. With resistance at 90. Oh, that was support 92.86. I'm sorry. With resistance at 93.87. Now, we shouldn't be able to just break down here because we are, it's just allowing the shorts to come in and say, okay, they'll support the market. That's all. So support is going to be right here at 93 even. Because we're seeing continued further erosion. Today, I'm talking about inequities. It's not generating any real buying in the dollar index, but it's just going to keep some support for the shorts. Onto the cross rates. Certainly, we've seen this follow through dip here. If they want to test the stops here, we're just going to give it just a little bit of room, which is just 69.52. Upside, the low from yesterday, 69.89. Onto the euro pound. With Bitcoin and pressed lower, yesterday we had 90.55. Obviously, this thing's being driven by those headlines. Uh, you can see here, it looks like we have a good chance to move higher. We do, but then we quickly run out of gas. We close at the low. Um, you can see some good volume coming in right across there, which is going to be 90.10. I'm just saying, going with the touches. That's what I'm saying about the good volume coming in there. And on the upside, resistance is going to be this low bar right there. It can right there. The close, the open, they all come in close, which is going to be 90.74. Onto Euro odd. Obviously, with the Aussie weakening, like I told you, that's a major development. If Lowe's saying that essentially they're just going to be providing that type of stimulus by purchasing bonds, changes everything. Why we're seeing a strong rally today. You have to go with the level. Doesn't mean they're going to hit it today, but that would be the one you'd be looking at, 65.81. Support, you see how it's up, up, and away. Support, you see all these touches coming here. It's going to be 64.80. I don't think it's going to be seen today, though. Onto the Euro Kiwi. A little bit of a hammer from yesterday and some follow through. Just going to go with the touches coming across. See here, right here, that confluence is here with this one. Here, this body. We've already had a decent little run, so probably see some selling come in right there, which is going to be 77.63. And this high is going to be for the low because that's where the stops would have been triggered. 76.62. Aussie yen. This broke lower. Look at that. Just 4 continuous straight down days. Support, we're going to look for all the different touches coming in here. That should provide volume support. 74.41. And resistance. Resistance is going to be that close there. 75 even. Onto the guppy. Kind of stuck in the middle here. We've kind of tested on both sides. Support's going to be right there. 36.12. with resistance at this bar right there, that low, which actually that turned out to be the high today so far, almost 37.20. And we've just broken past 1800 on the 11.8 in NASDAQ futures. And lastly, starting on, making this press now, breaking higher, because once again, because of the Aussie with the idea there'll be that stimulus type move with the purchasing the bonds, you go at the high right there, that close, that's going to be 83.69. And low is going to be this high right there. That's where they broke them, 81.96. And that'll complete it. And we've already talked about the indices. And I'll get this posted in the room, and we'll see you in the chat room. Thanks for joining us on here on the European Crossover webinar.